Hello investors, I'm Stuart Kruse and welcome to Kruse Asset Management's chart of the day. We're squarely in September, down 4.5%. So we're going to talk about returns by month over the last 20 years and which months have been worse, which months have been best, which have been good and bad. And so let's go to the data as always. So up on the screen right now, I have average monthly returns by month. So here we look at September right here, average returns down 1%. So it's the worst average returns of any month. So one of 4 negative returns. The best month is April. And then I know October always seems to be a troublesome month because we've had a couple big sell-offs in October over the years. But October and November are actually pretty good months. So let's take a look at another way to look at this chart. There was an old adage called sell in May and go away, and what they basically meant was go away till October. And so if we sold in May and bought back in October, the period returns in May from May, June, July, August, and September are 0%. And all the returns of the market come from October to April, which you can clearly see by this chart. So if we break this down a little bit more by quarters, so the first quarter basically has no returns. Second quarter, up 2.1%. Third quarter, again, no returns. Fourth quarter is the best, up on average of 3%. So here we are heading into the fourth quarter, so that's pretty good. But we say that, and we have run up quite a bit in the year so far in spite of negative economic news. And September being down 4.5% right now. The whole entire year has been much more volatile than, of course, what we see in these numbers. So let's look at this data a little bit more. We talked about how October tends to be a little bit more of a dramatic month. So here is standard deviations. How much does the month move? What's the average move of the month or deviation of the month? So October, by far, is the greatest volatile month. September, number 2, tied for 2. So it also was a down month, and being negative and highly volatile, that's probably not great for September. But October is pretty good. November and December actually have some pretty low volatility with, if you recall, some decent returns. And so let's kind of average this all up. Here are monthly highs, lows, and averages. So on the lows, we see October in the winning seat with the lowest monthly return. That's the minimum return that they saw in any particular month in October. We also saw a very low return in March, but you can see this is pretty low and pretty high, which gives you the nice range of volatility. September also has a nice range of volatility. In the middle, we have these average returns, as we talked about. So right now, we're coming into average returns of 1, 3, 4, 5% over the quarter. So that's really a good period to be heading into. And September tends to be pretty volatile. We're already down 4%, which puts us here. Could we go down a little further? Of course we could. So we're just looking at the data. We're going to keep an eye on the volatility. We'll probably see some bouncing around, but the markets are pretty expensive right now. And again, these are just 20-year averages. So could you see some big downturns in October like we've seen in the past? Of course we could, and especially with the expensiveness of the marketplace. So stay tuned. We'll keep an eye on the data. And as always, we'll invest with the odds in your favor.